Hello, everyone, and welcome to the Wealth Wednesday show. It's indeed an honor to be with you once again to discuss on matters concerning business and financial management. We are so excited to all that have been subscribing to our channel, to those that have been sharing the link out with your friends, inviting people to watch and get equipped. We are so excited and grateful. We are also grateful to all those that have been following us on our Instagram account, liking our Facebook page, as well as those that have gone a step ahead to become our clients. We can only be this far because of God and, of course, your continued support and loyalty. So, today we really want to take that time to appreciate you, appreciate every effort that you've been putting just to see that you get to learn and become a better money manager of your finances as well as your business. So, as we mentioned earlier in the day, we shall be discussing on how to calculate startup costs because with this pandemic, something that came out really clearly is people starting to come up with business ideas, which we greatly support. And we always encourage people to think and come up with ideas. But at the same time, we found out, we did a research a few months ago, and we found out despite people coming up with noble ideas, ideas that can, change the world as well as help them make profit and create employment opportunities, we found out that most people were stuck at the point of capital. And it's not that they do not know how much they need, but they cannot break it down. So if you cannot really break down what your capital entails, then it becomes very difficult for you to find someone to fund your business, or even people to pull think on how they can pull resources together to help you. And that made us to come up with tonight's topic, which is how to calculate startup costs. And as well, you might be thinking startup is just a starting business, or you know anything, but as well as buying an ongoing business, you need to know what do you expect when you are going to buy a business that is already ongoing. There are costs that will incur before you can really acquire that business fully. So, without taking much time, we will dive in right away. 1 minute, I check here. Yeah, so without taking much time, we will go in right away and start the session for tonight. And as I said earlier, for a business to be successful, there has to be planning. Planning is very, very important, and part of planning is knowing how much will it cost me to start this business? How much will I need to spend before the business can break even? I've also seen, we've had a lot of people coming to us and saying, I started a business and I don't know when it will even break even. It's been 2 years, it's been 1 year, it's been 6 months. I can't even pay myself. So that clearly tells you this person didn't um, take time to find out the startup costs that are involved with setting up that business. And truth be told, depending on the kind of business you are doing or you're setting up, some business it takes quite some time before they can pick up, and others it might take a very short time before they can break even. So, what is to break even? Break even is whereby a business is now able to sustain itself, it's able to pay its own expenses. This is including salaries, to employees, and you as the entrepreneur. Most people think now that I'm an entrepreneur, I'm not supposed to be on salary, but it's always recommended you put yourself on salary just like the other people you've employed. Um, there are benefits of you putting yourself on salary. Number one, you'll be very disciplined, as well as you will not be mixing business money with personal money. I've seen a lot of people again who, they start a business, it picks up, and since they are the founders, they are just eating all the money and mixing everything up because they are the founders. So, in such an instance, for a short period of time or for short term, it might seem to be a good thing happening or to do, but in the long run you may not be able to even know if the business is growing or not, because you've been um, mixing up the money and just using it like it's your salary. So it's very important for business people to um, ensure that they have put themselves under a salary for their business. And this can only mostly it usually happens when the business has break even. I don't know if there's a past tense for that. Anyway, so yeah. um so what is a startup cost? That is maybe the thing we need to start by, identifying what is a startup cost. Then I will go on to say how to identify your startup expenses. Then we will go to estimating how much your expense will cost. Then we can go to how to, create a full financial picture. And then we will wind up with how to use your startup cost calculations to get startup funding. Of course, I know the next question will be, okay, now I know how to calculate my startup cost and all that. I need to know how to get the funding, because maybe I don't have the enough money that can make me start that business. So we will maybe do another live video for getting startup funding, and just share some options that you can have. So my system now is, yeah. So why do you need to, calculating the startup cost for your business helps you to know how much you really need, because I'm not sure, but there are a lot of people that I've come across, some even, we talk a lot, and they are like, I need this money, I want to start this business. And you ask them, can you, break it down for me to know what will this money be doing, at what point, at what are you going to be doing with it? And the person cannot explain. This clearly tells you he or she did not do a homework. Maybe he watched or she watched a video somewhere, and the video is saying the businesses you can start with, let's say $500, which is okay. But you need to understand $500, how is it broken down? So that when you approach someone, or when you are even doing it for yourself, you know that, okay, my capital was totaling to $500, whereby $100 was to go to maybe utility bills, $50 was to go to printing and advertising, $30 was to go to, all those. You need to come up with such a breakdown. So 1 minute, yeah. So we will start. So a startup cost is basically the things that you need to make your idea a reality. So you've thought, you've seen a business opportunity somewhere, and you've come up with a business idea, and then you've checked the market and you've seen there is a market need for that idea. So you launch it. Now, once you've launched, you want to launch it. Before you launch it, you have to calculate the costs. You need to know, okay, how much do I need to be able to start this business? So that is that question of how much do I need and where will each fund go to is basically what we refer to as the startup cost. So there are a lot of examples. I will maybe share the examples later on, and yeah, as we continue. So how much money will it take to start your business? To answer that, it's basically calculating the startup cost for your business so you can know what to do and when to do. So I have some notes I had written here. So startup cost is basically why do you need to do as why do you need to calculate your startup cost? That is one question most people tend to ask, and I'll give us 3 reasons. Number one, the reason why you need to know how to calculate your startup cost is for you so you can request funding. There are a lot of opportunities for business funding. The problem is people don't know how to calculate the startup cost so that they can attract investors, or even be able to know that, okay, I need to save money to start my business in 6 months. So how much do I need to save? How will I use that money? So calculating your startup costs for your business will help you know how much you can request for funding. It also attracts investors. I think you've all had people pitching for their business idea. You go to investors, and what they usually look at is the startup cost and the projected revenue or the projected profit. So if I'm gonna go to an investor, I will go to them and tell them, okay, this is the cost for starting my business or running my business or scaling up my business. And when I get this amount of money, this is how it's broken down. This is the much that will go to advertising. This is the much that will go to um, buying the products and services, paying utility bills. And at the end, this is the projected income we are expecting to get once we channel this money to this project or this business. Now, the most investors, before they can invest in your business, they tend to compare the two. They compare the startup cost and the projected revenue. Then if the revenue or the profit is higher, then they can take the risk of funding a business. So that is how important it is to know how to calculate your startup cost, so that when you take it to them, to when you're approaching our investors, you are able to give them something to compare to. You cannot come and tell someone, I need a capital of 50,000 to start my business and I need you to help me. And they'll ask you what is in for me, especially when it comes to getting investors to invest in your business. And this is not is it called equity capital or capital equity? It's not that one where you give a share of your business. It's not that one. This is where the investors see the profit and they take the risk on you and give you that money. So a startup cost is very, very important, because you'll break down. You won't tell someone I need 50,000. You'll tell them I need 50,000 that will be broken down to A, B, C. And at the end, this is what you are projecting to get from that money that has been fueled into the business. And, after we get it, we'll be able to do ABC with that. So when you give someone that option of comparing how viable your business is, then chances are high they might be willing to invest in your business or business idea. Then the next reason why we do calculate startup cost is to estimate when you will turn a profit or when your business will break even. So As I said, this varies depending from one business to another, geographical location, the kind of market you're in. But with when you do a startup cost, you are able to know within 6 months, this business will be able to give me this amount of money. Or within 1 year, I should be able to see this kind of profit. So it gives you a forecast of the expected revenue. So that's how important it is to create a startup, to know how to calculate a startup cost. So it's a good idea to create. And then the reason why you need to create a startup cost or know how to calculate it, it creates a formal report of your expected startup costs. There are a lot of applications. I have come across many that helps you to do that. So all you need to do is to key in the information, and the application is going to give you the whole report. And then you want it to be in a format that's easy and clear to understand. And then investors and lenders, as I said, investors and lenders compare expected costs to projected revenue to determine the potential for your business to profit. So if you really need people to invest, or you need to take a loan from you need to get loan from an institution, then you need to know how to calculate a startup cost. And then what do you need to include in your startup cost? Maybe you're asking, now that I've known the importance of a startup cost, how do I estimate, and yet I have not started the business? Now, the first thing you need to do, you've come up with the business idea, you've already found out it's matching a market need. So the next step is for you to estimate how much your expenses will cost. uh, how do you determine or estimate how much expenses will cost? You simply list down all the expenses, and then you estimate how they actually cost. Now, this process will be different for each expense you have. Some expenses will have well-defined costs, like for example, permits and licenses. They are defined. You can check on Google the price for getting a permit to do a certain business, and you find the rates. But you cannot estimate the cost of things like salaries of employees, uh, things like utilities. You cannot have a fixed figure before you really get in the game. And then the other thing you need to know to estimate how much your expenses will cost is you can ask people who are already in the business, or you can ask your mentors, or even look online, or even look for service providers to see what similar companies pay for expenses. Example, maybe I want to start an electronic business. I want to be selling electronics. And then what I will do, if I don't get a mentor in that field, I will just go to people who provide the electronics. And then I just ask them, like, in a month, how much do you pay for your electricity? How much do you pay? You just do such kind of a questionnaire, and then you get an estimate. You can do 2 to 3 shops. You don't need to do a whole city. You just need to get a sample so that you can get an average and make it as your estimated cost. Then um, my laptop today is really doing something. Then still in listing your expenses, there are one-time expenses that are at the initial costs needed to start a business. For example, buying major equipments. If you are going to start, let's say, a photocopy business, you won't be buying a photocopy machine every night, every day. You won't be buying it every week unless it breaks down. But this is a one-time major expense. So the such kind of expenses may need to appear in your startup cost worksheet, so that you know that, okay, I'm going to buy these things and it's one time, but I will also be having to pay for these things, that is recurring expenses like utility bills and salaries, as well as I'm going to pay this maybe yearly or quarterly, especially things like licenses. You don't need, depending on the business you do, most licenses go from 6 months, 1 year, or 3 years, such kind of a thing. So as well as you also need to put in mind what some expenses like lawyer fee, accountant fee, such kind of things you also need to uh, in, include in your expense list. Now, I had written some examples of one-time expenses for a startup business, one of them being major equipment, something like a logo designer. Of course, you won't need someone to design your logo every week. It's a one-time thing, and unless with time you decide to change. Paying for permits like licenses, those are usually one time. For example, like license, maybe it expires after 2 years, you need to renew after 2 years. So that is at least a one time, it can be considered as a one time expense. Then the other section will be monthly expenses, which you know you will need them for the business to run. For example, salaries, rent, utility bills, those are things that you will need. If your business is online, you will need to do a lot of advertising and marketing. So you need to include that because it will be a recurring expense or expenditure. Then after you've listed them down, you've estimated how much your expenses will cost. Now it's time for you to, add up expenses for a full financial picture. Now this is where, once you've added up, this is what people call, I need business capital. This is now, they do step 2 before doing step 1, which is it works, but it's not that recommendable or recommended. Because if I'm going to be interested in your business and you tell me you need 50,000 and then you keep quiet at that, and another person comes to me and tells me this is my startup cost worksheet, and I see how this 50,000 has been broken down, and then there's a projection of revenue or expected profits and at what point they are expecting the business to break even. Trust me, I'll give the other person. I will support the other person because it shows that he or she knows what he or she is getting into. So those people who, are like, I need this lump sum amount of money to do business. Then you ask them, can you break it down? They're like, no, it's just, I will let you know how it goes. It doesn't go like that. You have to at least have a full financial picture. So you've already identified your business expenses. So you, of course, just adding up the simple like 1 plus 1. That's what you basically do. And then you add them up to come up with a combined figure. So maybe you've checked, you've seen my one-time expenses, they are going to amount to like 20,000. Then my monthly expenses for me to be able to start the business, they will be per month, I'll be needing 10,000. So in 6 months, I need 60,000. Now plus the 20,000, I need 80,000. So that way you can say this is the capital I need to really start my business. So after you've done that, you use your startup cost calculations to get startup funding. So you listed them down. Now you came up with a full financial picture. You can print, you can write it, you can make it to be digital, maybe in your Excel sheets or whichever application you use. Now you can now go to using it to get startup funding. Now it's a good idea to create a formal report of your expected startup cost. As I mentioned earlier, most people tend to look at the startup cost in comparison with the projected revenue or profit. Now, if you want, you need to have it in a format that's clear, easy, and easy to understand, so that when you present it to people, they can easily pinpoint and know that, okay, if I'm gonna give this person my money, this is what is going to be done, and this is what we expect after this time, and this is what we need at some point. Now, some of you might be saying, it's very hard to do these things. It's very tiresome. It's very um, challenging. But trust me, once you have listed down the expenses, I wrote here some of the expenses you could be needed to have. Um, the first expense is like office space, if you're gonna have a physical office, equipment and supplies, communications, how you're going to communicate to your customers, potential customers. Is it via messages? Is it via calls? Is it via internet, social media? Utilities, then licenses and permits, insurance where applicable, um, lawyers and accountant where applicable again, inventory, maybe we'll need a system, employee salary, maybe we'll need to employ people to do it for you, advertising and marketing, as well as market research. You need to keep on doing your market research, because we are in a very dynamic era where people most of the time customers keep on changing their preferences, and you need to keep up with them. Then we have printed marketing materials, as well as things like making a website, t-shirts, flyers. All those, they are just startup expenses that you need to put into consideration before you can start your business. Then another thing you need to note is make sure you have enough money. When you're starting out a business, it's a very risky thing to do, because you don't know when it will break even. Even if you have projected it in your startup cost calculation, it may take longer depending on the market. For example, if someone in 2019 December started a tourism company, tours and travel company, then in 2020 we had Corona. If this person in their startup cost they had projected by 2020, mid 2020, they could be able to break even. You see, there was an unforeseen circumstance that showed up, which is the pandemic. So what happens to such a person? So it's very important for you to make sure you have enough money or some other sources of income when starting your business. There are many ways you can do that, to ensure you have enough money. Either get other sources of income. This could be employment, it could be investment, it could be other businesses, but at least have another flow of income that's coming in to support the business until it becomes steady. Why do you need to have enough money? As I said, you will need initial startup money, as well as you will need operating capital. You will need, yeah, you will need money to pay the utility bills, the day-to-day expenses of the business. And until it stabilizes, you will need to dip into your pocket. Then I also say, one thing to do while you are calculating your startup cost is preserve cash flow from day one. I know there's this excitement that comes with, launching a business, starting a business. You get so excited, and sometimes the market is very kind and very nice, like you get customers right away. You might be tempted to over misuse the money, and then 3 months down the line the customers are not there, because people are always excited with new things. For example, if I start a restaurant right now, there will be a hype that will be created around it, right? And then it will, if I do not preserve the cash flow that I create from that hype when the business is starting, maybe 6 months down the line the hype will not be there. So I will need money to keep it running, as well as keep advertising to people and encouraging people to come. So how do you preserve cash flow from day one? Number one, by starting with only the absolute essentials. Sometimes when you're starting your business, you don't have to go all flamboyant, uh, you go with the absolute essentials, then keep growing and building on it. Remember, there's always this proverb that says Rome was not built in a day. So your business was not built in a day. The businesses that you are seeing right now, that they are really, market giants, it wasn't built overnight. So why would you pressure yourself and start to, buy extra things that are non-essential things, that yes, they are they are useful to to their business, but they are not needed at that time. So it's important for you to start with only the absolute essentials. Then the next thing is focus on your needs, not your wants. And still to this absolute essential, I just want to say there was a story I had. Someone started a business and then they were like, I'm starting a business. They went all out, bought equipments, very nice, expensive, very, very expensive equipment. Then 3 months down the line, they closed the business. And then you ask them what happened. You had the capital, and then we came to find out, or the people later came to learn that the person overspent on the equipment more than the more than knowing how to get the market. So it's very important to learn to preserve cash. Otherwise, we'll end up with a business that's set up, but you don't have operational cash flow. You don't have cash flow to run the operations of the business. So it's very important. Then the other thing why you need to preserve cash flow is, or not why, how you can preserve cash flow is focus on your needs, not your wants. Now, from the list that I gave you, look at the needs of that business, and then focus on doing that. Then the wants can come in later on as you continue to grow. Then we have the other way to preserve cash flow is by using buying used equipment or leasing equipment. Now, for example, if I'm just starting my business, it doesn't make sense for me to go and buy land and start building an office. And I'm just starting the business. I can rent space. Sometimes even you don't need to get the whole building. Maybe you just need to rent a space, an office space, and you are done. So it's good to always think outside the box. This business that I'm starting, do I need to buy the equipment, or I can lease them at a lower price? Or the main goal is to just reduce your overhead costs until the business picks up. Then learn to negotiate favorable terms from vendors. You're starting out, you have this hype, you feel like you can get it done all at the same time, but don't forget negotiation. Negotiation is very important. I always say, anytime you're going to spend huge amount of money, don't be the person who goes and says, okay, it's fine. No, you need at least negotiate the price. Negotiate with your vendors. Negotiate with them their terms and policy. Ask them if they can give you maybe 30 days for you to be able to pay them, get goods on credit and pay within 30 days. Negotiate to gain favorable terms from vendors. And then the last thing on how you can preserve cash is collect deposits or prepayments from clients, especially for people who do online businesses. Um, I have seen a lot of people ending up being misused or abused in business by, you find someone, they ask for, maybe you're selling, let's say, t-shirts. Now you're selling these t-shirts online. Someone likes them and wants to take them. Now, what this person does, they tell you to send the parcel to where they are, and then they don't give you money. They say they will give you once you deliver the product. Then when you deliver the product, they don't like it, and then they refuse to take it. What happens in such an instance? You, as the entrepreneur, the business person, you are going to lose, because you're going to have an expense that it will not be paid for. The transport and the packaging and all your time has not been paid for, and the person has rejected the product. So learn to collect deposits or prepayments, so that you don't find yourself doing business that's not, that's not giving you anything. Then I've been mentioning break even. So maybe you're asking, how do I calculate my break even? How do I get to know that, my business will break even at this point? Okay, we do have like 3 types of break even. And the first one is break even without a consistent salary or withdrawal. So this is where your business is able to sustain itself, but it cannot give a consistent salary. So maybe you have a client in this month, then the next time you're getting a client, maybe it's after 4 months or 5 months. So yes, you're getting clients, but it's not that consistent. Then we have break even with a minimal consistent salary or withdrawal. So this means that the business has reached the break even point, but at a very minimal point. Maybe you're getting, every month you can't lack money or a customer, or you cannot miss out on making a profit, but it's not that much that can say that it's gonna pay maybe utilities for 6 months, but it is able to sustain itself and do something every month. Then the other break even we have is break even with a good consistent salary or withdrawal. So this is where the business has really grown and stabilized, and now you are even able to pay your vendors, pay for products and services, pay for pay your employees, and even now scale the business. So at this point, the business is considered to have really broken even. Now, due to the interest of time, I'll just mention on how you can calculate break even for your business, and then we will wind up. Now, to calculate your break even points, there are things you will need to have. Number one, you'll need to have forecast sales revenue. That is the first thing we'll need. Then you'll also need to have forecast cost of goods. And then you will need to have forecast gross profit. So number one is the forecast sales revenue. The other one is the cost of goods or services. And then you have the forecast gross profit. And then once you've had those 3, then you'll have the forecast monthly overhead costs or expenses, then forecast net profits. So maybe I'm forecasting my sales for this month has ended. Let's say for June, I'm forecasting my sales to be 100,000. The next thing I do I need to forecast the cost of goods and services that will enable me to deliver the product to the customer. So maybe my forecast cost of goods will be 80,000. Now, what is my gross profit from that? It will be 100 minus 80, which is 20,000. Then this is my gross profit. Now I'll come down and calculate forecast monthly overhead expenses. Maybe internet. Now, maybe internet costs me 5,000. So I'll minus from the 20,000, the 5,000, I remain with 15,000. So I project that my business is going to break even at a net forecast profit of 15,000. So that is how you just calculate it. And you are able to know after how long I'll be able to break even. So with that said, of course, there is a lot to talk about when it comes to startup and startup costs, but I think we can stop there and get to do another show or another episode where we can get to break down everything in terms of how to do a business pitch and how to pitch to investors so that you can get funding where necessary or where needed. So until then, unless you have a question, we we are going to wind up. I was just looking at my notes to ensure that I haven't missed out on anything that I had written here. Yeah, so that is all we have about startup, how to calculate a startup cost. I hope by watching this video, you will be able to know or understand how much you need for your business and how or when will it break even. Remember, a startup, learning how to calculate startup cost is very important as it gives you the full financial picture of how the business will be and what to expect. Now, it doesn't guarantee you 100%, but uh, you minimize certain risks because you already know what to expect and how to mitigate certain risks. So until then, we wish you a blessed week, midweek or week, and we encourage you to keep subscribing to our YouTube channel, turn on notification, and keep watching our videos as much as possible so that you can become financially smart. And all this is for free, so it's better to equip yourself and get to know how you can become a better manager of the money or the business that you have. So until then, in case you have any question, feel free to write in the chat box or comment box, and we shall be getting back to you as soon as possible. Ensure to follow us on our Instagram account, Financial Wellness Center, as well as our Facebook page, Financial Wellness Center, and Twitter, Financial Wellness Center. So goodbye and keep healthy.